Welcome to my November market update video where I provide some pretty cool stats and charts on where the market is now and where I think it might be going. So be sure to watch the rest of this video and you'll be able to get an in-depth understanding of where we're at. And if you want a more personalized understanding of the value of your property, just reach out. Hey everyone, welcome to November, and it's that time of the month again where we get to report on what took place in the Calgary real estate market for the month of October. And let's dive right in by looking at this chart that I have right now in front of us. And I think you'll find this pretty interesting that the total sales in October of last year, in 2021, was 2,184, right there for MLS sales. We did 1,857, which is about 15% lower than it was a year ago. But I'm going to tell you, put it into perspective, in 2019, we only did 1,684 in October of 2019, and that was with lower interest rates. So for a lot of people who think that the interest rates are really dramatically affecting our market and slowing things down in a dramatic way, they're just simply wrong. It's slowed down 15%, but that's still a pretty strong month. And if you look at year to date, 2022, we've sold 26,823 homes, whereas a year ago we were at 23,842. So we're still up 12.50 year to date. But we all know that a lot of that took place in the spring because the market was so hot in the springtime. But interestingly enough, our inventory levels are down 21.8%. which I find that very interesting when you consider, last year, year to date, with our inventory was at 5701 and we're at 4458. And for October, we're at 3887 compared to 4876 a year ago. That's actually 20.28% just for the month of October. And our month supply of inventory in relation to, how many sales are 2.09 months compared to 2.23. And our sales to list price, 97.6% compared to 97.8. So these are all pretty good numbers for October. I don't think anyone can deny that. And of course, if we look at our benchmark price, we're up at 523,900 from 477,800. Now, let's just look at this chart really quickly, and this goes all the way back to 2007. So in the blue, you can see the months of supply. So you can actually see here that our months of supply is still pretty darn low when you look back over all the years to 2007. I mean, we still have a pretty low supply of inventory, and yet we have a pretty high demand. When you factor in, look at the so-called lean years of 2015 all the way to 2020, where we had a high supply of homes for sale. And you can see a little bump up in pricing here in red and, a slight correction. But I can tell you, if things keep going the way they're going, we're not going to see any major price decreases at all for at least the Calgary area. Now, I know other parts of Canada might be experiencing something different, but I think we're going to be a little bit different. Let's just take a look at these charts, which gives us a little bit easier way of looking at them and understanding them. I love looking at the absorption rate. That's 48.38%. So we're just barely into a balanced market now. When you look at 48% of the houses listed last month sold, and that's just for October, and this is detached houses. And again, if you look at where we came from, just for detached, we're at 623,900. The other chart that I showed you for the benchmark, that included condos and everything, but this is just detached. We're at 623,900. So that's down, 0.65% from, from September. So not a major correction there. And definitely we've improved dramatically since the lean years of 2015, 2016. And if we go to this chart, which I also love looking at, that's 942 out of 1947, to put the hard numbers into perspective. And at first glance, you might think that's not great numbers, but really it is. I can tell you 48% absorption rate. When you consider the lean years, we're up around 18% absorption rate. That's pretty good when 50% of the houses listed have sold. These are some pretty strong numbers considering that the interest rates are higher than they've been for quite a few years. 36 days on the market is all that it's taking to sell a property. Here's our market distribution, and I love this chart as well. You can see leading the charge is the $500,000 to $600,000 houses at 24% of the market. 6 to 700,000 is now 20% of the market, and 4 to 500 is 19% of the market. So this, it's interesting when you look at Calgary to think that really, $400,000 to $700,000 is the majority of our market. When you compare that to Toronto or Vancouver, and we're arguably the third largest city, we're actually pretty good value here. And I think that's one of the reasons why a lot of people are moving here. Even with the higher interest rates, it's still really affordable to live in Calgary when you consider the other markets in Canada, at least all the major markets anyway. And this is really still staying strong. 1 million to $1.5 million is still over 5% of the market. So not much seems to be changing. We're still having a strong market for October. So, by looking at this, things are looking pretty good coming into next year. So this is getting into attached properties, 46.88%. So that market is staying strong there as well. I mean, to think that 46% of the properties listed would sell. Now, it still means you have to be realistic. I mean, some of these properties just don't sell because, they don't get them homes ready for sale. They don't do the extra work to make them look pretty. They don't price them properly. They don't market them properly. There's a lot of reasons why properties don't sell. It's not usually just one thing. It's usually a series of a few things, but price often leads the way. $558,700 is the benchmark price. That's down only slightly, 0.66% from September. You go down here, that's 158 over 337 sold. 39 days on the market is all it's taking to sell. So that's your gauge. If you're selling and you haven't sold since then, you need to take a good look as to why that's happening. There's something going on. And you can see here, 300 to 500,000 is still the majority. And that's just because it's always going to be the second choice in most cases. But still, 700 to 900,000, that's our infill market. That's still 17% of our market for attached homes is right here. And you've got, less than 50% that's in that $300 to $500,000 range. So these numbers look pretty good too. Let's look at the row houses. Row houses, wow, 68.82%. So continued over from September, there's a lot of people buying row houses. Well, no wonder when your benchmark price is $361,000. That's pretty attractive. Only down 0.3% from September. So that's a pretty strong market when you look at that. And you look at the fact that our benchmark price at 361, when you look at the peak of 2015, we've far surpassed that. So there is a continued demand for these type of properties. 320 out of 465. So if you're selling one of these properties, you should have no problem whatsoever selling them if you're doing all the things right. 37 days on the market is what it's taking on average. And of course, you can see 300 to 400,000, 42% of the market. That's a really good price point for first-time buyers and a really good product. Last thing, the condo market. Never thought for years I would be excited to see that condos are doing great, where they were just really, really doing terrible for a number of years, especially from 2014 to 2020. But 38.3% absorption rate, when you consider that there were times where it was only 12%. That's a pretty good market for condos. Benchmark price $277,800. It's affordable to get into the market in a condo, and we have a lot of people who are downsizing into condos as well. And that's continuing making demand. A lot of people are moving out of their expensive homes now, and the kids are growing up, and these are becoming attractive. Only 0.4% down in price from September. So that's fantastic. You can see at 277,800, we are getting very close to our peak that we experienced in 2015. So that's great news for condos. 437 out of 1,139 have sold, averaging 52 days on the market. Now you can still see our sweet spot. Almost 50% of the market is there. As I mentioned before, it's first-time buyers and people downsizing. So this is a price point that's really affordable. So it's really a good investment for condos if you're under 400,000. If you're buying in this market that's a lot higher priced, it's just you have to expect that because there's a lot less buyers, it's going to take a little bit longer to sell. Now, I can tell you in the month of October, I personally had a pretty good month as well. Actually, almost all the listings that I took sold. And I'm proud to say that all the people that I worked with took my advice, and some of the homes that needed a few things to get ready, they did them, and we brought in our people. We did some painting, some touch-ups in some cases. There was one case in particular, we did a little bit more, but it's all been worth it. We were able to make a return on that money that they spent, and I was able to negotiate a better price. So I think all in all, it sold reasonably quick, and we got a little bit more money. So it does go to show a little bit of work you put into your listing can make a difference, and add that to some really good marketing and some strong negotiation skills. I don't think a lot of times people think about the negotiation side of this business, but whether you're buying or selling, the truth is, if you know what you're doing, you can influence the other side to a certain degree, meaning that there are cases where when you're selling, the buyer is willing to come up a little bit more. And in cases where you're representing the buyer, you can be persuasive that the seller will come down. Good negotiations can make a difference. So keep that in mind when you're looking to sell. And believe me, if you want some advice on it, all you have to do is reach out to me, and I'll be happy to do that. Have a wonderful November, everyone. And don't forget to recognize Remembrance Day. It's a really important part of our year.